Here is a question for you. Out of the 500 largest, most dominant companies in the United States, the tech giants, the banks, the manufacturers, how many of them are dedicated gold miners? 5, 10, maybe 20. The answer is 1. Just one company carries the torch for the entire gold mining industry within the S&P 500. It isn't a trendy startup. It isn't a tech unicorn. It is a company that has survived the Great Depression, World War II, the dot-com bubble, and the 2008 financial crisis. It literally invented the modern gold industry as we know it. Today, on this channel, we are digging deep into the bedrock of the American economy. We are covering Newmont Corporation, ticker NEM. We are going to cover everything: how a Wall Street colonel started it in 1916, the geological discovery that changed the world, their massive mergers, and the exact dates they entered the major indices. If you are looking for exposure to gold with the stability of a blue-chip stock, this is the only analysis you need to hear. Welcome back. On this show, we strip away the hype and look at the cold, hard history and numbers behind the world's most fascinating stocks. I'm your host, and today we are analyzing the world's largest gold mining company. Let's start with the origin story, because Newmont didn't actually start as a gold miner. It started as a portfolio. The year was 1916. The First World War was raging in Europe. Back in New York, a man named Colonel William Boyce Thompson was already a legend. He was a financier, a mine promoter, and a man with a serious eye for value. He founded the Newmont Company as a holding company to manage his private investments. Here is a fun fact about the name Newmont that most investors miss: it's a portmanteau. Colonel Thompson was a man who loved two places above all else. He made his vast fortune in New York, but he was born and raised in Montana. He combined them, Newmont. From 1916 to 1921, this was a private empire. But Thompson had bigger ambitions. On May 2, 1921, he reincorporated the business as Newmont Corporation. This is the official founding date you will see in the corporate registry. At this stage, Newmont wasn't digging for gold. They were trading oil, copper, and minerals. They were essentially an early-stage venture capital firm for natural resources. They bought into everything. But the real turning point came in 1925. This is a critical date for your notes. In 1925, Newmont sold its first shares to the public. They weren't on the big board yet, but this was the moment Newmont ceased to be a private piggy bank for Colonel Thompson and became a vehicle for public wealth. Think about the timing. 1925, the Roaring Twenties were in full swing. Stocks were flying. And Newmont participated in that boom. But unlike many companies that vanished when the market crashed in 1929, Newmont had assets in the ground. Real value. They survived the Great Depression not by selling hype, but by selling copper and oil. While the rest of the market collapsed, Newmont was able to lean on its diversified portfolio. They weren't just a paper company, they owned stakes in tangible commodities that the world still needed, even in a depression. This resilience is written into their DNA. Fast forward to 1940. The world is at war again. Uncertainty is at an all-time high. In this environment, Newmont levels up. In 1940, Newmont Corporation officially listed on the New York Stock Exchange. For the next 2 decades, Newmont was a diversified beast. They owned copper mines in South Africa, the famous Ukiet mine. They had oil interests in the Gulf of Mexico. They even dabbled in cement. They were a materials conglomerate, operating more like a mutual fund of natural resources than a singular mining operator. But the company we know today, the gold giant, was born in the desert of Nevada in the early 1960s. This is the most important pivot in the company's history. In 1961, Newmont geologists were exploring an area in Nevada that everyone else had ignored. The gold there wasn't in big nuggets or veins you could see with the naked eye. It was submicroscopic, gold particles so small they were invisible, trapped inside the rock. Historically, this rock was considered waste. You couldn't mine it. But Newmont's scientists and engineers realized that with new chemical processing techniques, specifically cyanide leaching, they could extract this invisible gold profitably. They discovered the Carlin Trend. This cannot be overstated. The Carlin Trend was the largest gold discovery in North America in the 20th century. In 1965, Newmont opened the first open-pit mine on the Carlin Trend. They poured their first bar of gold, and the industry changed forever. Before this, you hunted for gold. After Newmont, you manufactured it from low-grade rock. This shifted the economics of gold mining from a treasure hunt to a factory process. Because of this massive success and their growing stability, Newmont attracted the attention of the index committees. Here is the date you asked for, June 30, 1969. On June 30, 1969, Newmont Corporation was added to the S&P 500 index. This is a prestigious club. To be added in the late 60s and stay there is a testament to resilience. I want to clarify a specific point here. Newmont has been a staple of the index. While many companies have been kicked out, merged away, or gone bankrupt, Newmont has maintained its position as a blue-chip materials stock for over 50 years. There was a brief period where corporate restructuring changed their ticker or name slightly, for example, the merger with Newmont Mining Corporation and Newmont Gold Company in the late 90s, but functionally, the entity has been a consistent presence, representing the gold sector in the S&P 500 continuously. They did not leave and rejoin, in the traditional sense of failing and fighting their way back. They have been the rock. Let's talk about the 1980s. This was the era of the Gold War. Not a real war, but a corporate war. In the 1980s, corporate raiders were everywhere. T. Boone Pickens, a famous corporate raider, actually tried to take over Newmont. He wanted to break it up and sell the pieces. Newmont had to fight for its life. To survive, they paid out a massive special dividend to shareholders, $33 per share, to make the company less attractive to the raider. They survived, but they learned a lesson: you have to be big to be safe. The hostile takeover attempt in the 1980s changed the company's psychology. They realized that in the global commodities market, scale is your only defense. This kicked off an era of aggressive expansion that would define the next 20 years. In 1997, they acquired Santa Fe Pacific Gold. This consolidated their position in North America. In 2001, they merged with Battle Mountain Gold. But the real game-changer came in 2002. In a complex three-way deal, Newmont acquired Normandy Mining from Australia and Franco-Nevada from Canada. By the early 2000s, Newmont had become the largest gold producer in the world. They were no longer just an American company, they were a global superpower with footprints on almost every continent. We are now entering the modern era of Newmont. The last 5 years have arguably been the most transformative since the discovery of the Carlin Trend. The gold mining industry is fragmented. There are hundreds of small miners, known as juniors. But the big institutional money, the pension funds, the ETFs, they want scale. They want safety. They want Tier 1 assets. In 2019, Newmont made a massive power move. They announced a merger with Goldcorp, a Canadian giant. This was a $10 billion deal. When the ink dried, the new company was an absolute behemoth. This merger solidified Newmont's position as the world's leading gold company, with assets in the best jurisdictions, the Americas, Australia, and Ghana. But if you think 2019 was big, 2023 was even bigger. Newmont set its sights on Newcrest Mining, an Australian gold and copper giant. This was a legendary acquisition. It wasn't just about getting bigger, it was about getting better. Newcrest had massive exposure to copper, and if you know anything about the green energy transition, you know copper is the new oil. The deal closed in late 2023, and the integration was finalized in 2024. This acquisition consolidated Newmont's dominance and gave them access to the Lihir mine in Papua New Guinea and the Cadia mine in Australia. So, where does the company stand today? As of early 2026, Newmont is a monster. They are the only gold producer in the S&P 500. They are listed on the NYSE and multiple other exchanges such as the Toronto Stock Exchange, TSX, the Australian Securities Exchange, ASX, and the Papua New Guinea Exchange, PNGX. We also have to touch on leadership. For years, the company was guided by Tom Palmer. But effective January 1, 2026, a new era began. Natasha Viljoen took over as president and CEO. She is a powerhouse executive with deep experience in the mining sector, previously leading Anglo American Platinum. She is now the one steering this ship, tasked with optimizing the massive portfolio they have built. Now, let's look at the business model. How does Newmont actually make money? It's not just digging holes. The key term you need to understand is Tier 1 asset. In the mining world, not all mines are created equal. A Tier 1 asset is the holy grail. It is defined as a mine that produces over 500,000 ounces of gold a year, has a mine life of at least 10 years, and operates at low cost compared to the industry average. Newmont has more of these Tier 1 mines than anyone else in the gold space. Why does this matter? Because gold prices fluctuate. If you own a small, expensive mine, you go bankrupt when gold drops. If you own a massive, low-cost Tier 1 mine, you remain profitable even in a bear market. They operate in 9 specific countries: the US, Canada, Mexico, Dominican Republic, Peru, Suriname, Argentina, Ghana, and Australia. Notice something about that list? They generally avoid high-risk geopolitical zones. You won't find Newmont operating in active war zones or unstable regimes where the government might seize the mine tomorrow. This jurisdictional safety is why they command a premium in the stock market compared to their peers who might operate in riskier parts of West Africa or Central Asia. While they are famous for gold, they are also a major producer of copper, silver, lead, and zinc. This is crucial. This is called byproduct credits. Often, when they mine for gold, they find copper in the same rock. They sell that copper, and the profit from the copper is used to offset the cost of mining the gold. This lowers their all-in sustaining costs, AISC, making their gold margins fatter. Let's talk about financials. Why would you, as an investor, put Newmont in your portfolio? There are 3 main arguments: inflation protection, dividends, and volatility hedging. First, inflation. Historically, when the dollar loses value, gold gains value. Since Newmont's revenue is literally tied to the price of gold, they act as a proxy for the metal. But unlike a physical bar of gold which just sits in a safe and gathers dust, Newmont is a functioning business. It generates cash flow. It grows. Second, dividends. Newmont has a unique dividend framework. They have a base dividend that they pay regardless of the gold price, and then a variable dividend that kicks in when gold prices are high. This means if gold goes on a bull run, you don't just get capital appreciation, you get a fatter check in the mail every quarter. They have been paying dividends continuously since 1934. That is over 90 years of payouts. Third, the safe haven status. When the market crashes, think March 2020 or 2008, investors panic. They sell risky tech stocks and they buy gold. Often, Newmont stock will zig when the rest of the S&P 500 zags. It provides a non-correlated asset in your portfolio, reducing your overall risk. However, we have to be factually accurate about the risks, too. This is not a risk-free investment. Mining is incredibly hard. It is capital-intensive. Risk 1: Input costs. If the price of diesel fuel goes up, Newmont's profits go down because they burn millions of gallons of fuel running their massive trucks. Risk 2: Labor. Labor unions are strong in mining. Strikes can halt production for weeks. Risk 3: Divestiture. In 2025, Newmont had to engage in a divestiture program, selling off smaller, non-core mines to clean up their balance sheet after the massive Newcrest acquisition. This is a standard business cycle: buy big, then trim the fat. But it introduces uncertainty. And we must mention sustainability, ESG. Mining has a dirty reputation. But Newmont is consistently ranked as the top miner in the Dow Jones Sustainability World Index. They were the first gold company to commit to net zero carbon emissions by 2050. Why does this matter to your wallet? Because clean miners get permits faster. If a company has a bad environmental record, governments won't let them open new mines. Newmont's focus on ESG is a strategic moat that keeps their growth pipeline open. Before we wrap up, let's do a quick lightning round recap of the dates you need to memorize for Newmont. 1916, founded as the Newmont Company by William Boyce Thompson. 1921, reincorporated as Newmont Corporation. 1925, first public stock sale. 1940, listed on the NYSE. 1965, discovered the Carlin Trend, the invisible gold. 1969, entered the S&P 500, and never left. 2002, the three-way merger creating a global superpower. 2019, acquired Goldcorp. 2023, acquired Newcrest, adding copper exposure. 2026, Natasha Viljoen takes over as CEO. So, that is the story of Newmont Corporation. It started with a colonel who loved New York and Montana. It survived the Great Depression. It revolutionized the science of mining in Nevada. And today, it stands alone as the solitary gold guardian in the S&P 500. It is a company that bridges the gap between the old economy of hard assets and the modern demands of Wall Street efficiency. Whether you are a gold bug predicting the end of the dollar, or just a prudent investor looking for diversification, Newmont is a ticker that demands respect. We hope you enjoyed this deep dive into NEM. We put a lot of research into these scripts to ensure you get 100% factual accuracy, so if you learned something new today, maybe about that 1969 S&P entry or the invisible gold in Nevada, please do us a huge favor. Hit that subscribe button, drop a like, and comment below. Do you own gold in your portfolio, or do you prefer to own the miners? Let us know your strategy. Thanks for watching. We will see you in the next video.